Well, good morning, pro traders, and welcome to another Monday morning market review with GoPro Trading Academy and yours truly, Ian Giffen. So, last week we spoke about how choppy the markets had been, and I even suggested that we might best spend the week playing golf or doing something else that you enjoy. And I think I was proven pretty right about that. It was definitely another choppy week. Uh, I wouldn't say that there were any really easily tradable markets at all. And in the lead up to non-farm payrolls, of course, we did see some price movement, but it was also one of those weeks where, or one of these months, I suppose, where we could say that by not trading non-farm payrolls, we did the right thing. There are times where trading through non-farm payrolls, especially on the lower time frames, we would look back on that and regret not being involved. But for those folks who are trading the lower time frames, last week definitely would back up the reason why you should stay out of trading on non-farm payroll Fridays with the lower time frames. Higher time frames, of course, we always trade through non-farms, but even those strategies, have kind of really died off over the last few weeks, and there's not that much available for trading at the moment at all. I'd also need to say at some point, and I guess that now that we've moved into June and we're moving towards the middle of the year, is July into August is the Northern Hemisphere holiday season. And for those of you who've been around for a few years, and many of you have been on my courses in the past, you'll know that around this time of year, I do start talking about the fact that the Northern Hemisphere holiday season can be a pretty quiet time in the market. So liquidity dropping off and not as much activity, certainly tradable activity as we would like, directional volatility. That being said, the last few years, with all of the interesting developments we've had, and when I say last few, probably 5 or so, since the Donald Trump election victory 4.5 years odd ago, and followed on by multiple events. Last year, obviously, being the COVID crisis hitting the markets just over a year ago. And that has kept the markets pretty lively through the mid-year. Now, as always, I don't look to predict anything. I let the markets tell me what to do, when to trade and when not to trade. It's just that it's almost like we're seeing a bit of an early establishment of flat trading conditions. But of course, that may well change. It may well even change this week. So looking through the charts today, we're going to see a lot of flat stuff from last week. And it's not going to take us a long time to look at what actually did happen. But let's see if there's anything, and there are a couple of markets where there is some potential, but it's, at the moment, it is no more than that. So we need to sit on our hands, as always, and wait for the right conditions to reveal themselves, and then we can go for it. But right now, there's not much of that. Okay, so starting here on the Euro USD, we've got our weekly chart where there wasn't much change, but last week did ring the high of the previous week, which means this extended bullish wave has come to an end at that preceding resistance level. So nothing to trade here, because it is obviously deep inside of our channels. There's no WM pattern. So nothing really for us to do, but interesting to note that that resistance level did hold. And obviously on the daily time frame, we were trading on the lower time frames this bullish trend up until a couple of weeks ago, but last week, where we see that that ringed high on weekly, in terms of the cyclicity on daily, we can see a breakdown in sequentiality of cyclicity here, which did also lead to an overlay, winning overlay. But apart from that, you can see that bullish trend very much over. And we had identified the previous week that it turned weak with this encroachment of this phase 2 wave on the preceding phase 2. We'd already spotted that this had become a weak trend, and of course then last week went from a weak trend into no trend. So here we are sitting inside of both our 3 and 4 wave HDC channels. If you are trading the LPO channel, then we do have a breakout on that. So this is probably a good teaching example for me. That was the last phase one. Let me just make that a little bit less loud. That's the last phase one. We had phase two. Phase two. Remember, this bearish wave is in fact a phase two, not a phase one, because it did not close below the previous wave's low. And so phase two, that's the end of the trend. Last phase one that's visible at that point in time is here. And of course, that means that we did get a breakout last week, Thursday, with non-farm payroll Friday pushing us back inside of it again. So if you're trading LPOs, that's an example of one right there. But nothing else. There is nothing else for us at the moment. And certainly, if this bullish movement here turns into a bullish wave with an isolated low at the bottom here, then it'll still certainly be weak. There's no real strength showing itself there at all. Okay, enough of the euro. Let's move on to cable. And here on weekly, we've seen a continued test of this resistance level. It's definitely not broken through it. Last week was a bit of a bearish spinning top doji, and we're not seeing anything there at all. And of course, it looks like this on daily with a repeated test of that resistance level there, which is pretty much the same. And it's just rolled over and come back down again. So nothing for us at all. Definitely not in a trend. We're deep inside of our channels. But let's also recognize that we are close to this resistance level here. So should we get a breakout, it's in the bullish direction, and that could happen in relative short term, then of course we could be looking to trade that as well. But at the moment, as you can see, it's just very, very choppy. But the fact that we are pushing up against the resistance level means that we can just keep an eye on it. Right, so let's move on to the dollar yen. I said it was going to be a quick one, but I'm already talking too much. Okay, so dollar yen on weekly, also nothing here on weekly, just that bearish high test. And on daily, we did see a marginal breakout on Thursday. We've seen a couple of pairs do that. They pretty much look like they're all false breakouts. Of course, we can't say it's a false breakout until the potential cyclicity has broken down completely. If we get a lower close today here, of course, that would indicate a phase one. But even though it's a marginal breakout there, it's back inside of the channel and showing no bullish strength at all. So not tradable, of course. And there are a few like that. Dollar Swiss, similar to Euro USD, but upside down. Also got this long extended bearish wave here, has come to an end with that low ring last week, but nothing else to be said really. But of course, that does mean that again, that weakness that we observed in this bearish trend on daily has turned into a breakdown in sequentiality of cyclicity with a phase. Well, we've had a couple of phase twos here, and now a bullish phase one inside of the channel. So another overlay there, which worked out. But apart from that, there's nothing for us to do except sit and watch. But of course, again, we are close in this case to a support level. So let's keep an eye on that, because if we do get a bearish breakout, that would obviously then be tradable for our core strategies, or lower time frame core strategies anyway. Right, USD CAD has been bouncing around on this support level for a while, and we can see that with now the last 3 weeks in a row. Sitting on that support level, so nothing for us really to do there, and that's what it looks like on daily. Very clearly intact support. So I think we spoke about the fact that I think we did have a bearish daily impulse over here, and that got taken out on its trailing stop through the course of last week. So that was one of our last remaining trades, I think, that fizzled out during the course of the week. Okay, so next up are the two Eastern pairs in our majors. Aussie first, still nothing on weekly, very flat. That bullish candle means nothing to us at all deep inside of the channel. But another example where Thursday we did get a marginal breakout of the channel, with Friday coming straight back inside again. So another example, as I mentioned, of something that happened quite a few times last week, with a marginal breakout and then pulling straight back again with the non-farm payroll announcement on Friday. So again, nothing for us to do. Kiwi haven't really touched now for a while. Similar picture, obviously, on weekly. Daily, it didn't even give us that marginal breakout. So, yeah, similar thing. Deep inside the channel, very choppy. Nothing for us to really bother with at all. Right, so that's the end of the majors and the minors. On to our yen crosses, which, as you know, I like to keep all together. So last week, definitely showing a potential significant end to this extended bullish run that we've had for going on 2 months now on the euro yen. So the bearish candle there, even though we haven't yet had that high ringed, as of yet, it looks like that is going to happen this week. Of course, we've still got 5 days to go, but that is still quite significant in terms of what happened last week. Technically, on the daily time frame, the trend is still intact because we haven't yet seen a breakdown in the cyclicity. But yeah, we were talking last week as well about the quality of the price movement in phase one and phase twos, and here we can see that we've got this bearish impulse candle on Friday. Looks like we might get another one today. That also brings us back into deep inside of the price territory of our channel, which means that it's weak. So we wouldn't really be looking to do anything with a weak trend anyway. But nevertheless, worth keeping an eye on that. It also means that any future potential bullish move has got the outside C close disqualified. So we've already got this is a potential C, obviously. So we've already got an inside C close going forward. So that already is a sign of weakness, and we'd need to see that weakness eradicated one way or the other if you are being that selective. Which, if you're trading, if you're part of the funded trader program, you certainly should be. So you should be sitting on your hands with all of these. To trade these sort of trends is obviously a lot more aggressive now that they've become sort of weak. On the similar picture on GBP Yen, here we did get an inside bar or candle for last week, but it's not that much of a different picture. It's showing that this bullish run may well be over, at least for the time being. A bit more significant here on the daily time frame because we have had a breakdown in cyclicity. So there's no way that we could even remotely call that a trend anymore with phase two followed by a phase two. So deep inside the channel, and doesn't even look like it wants to go back and test that resistance level at the moment, of course. So let's wait and see what happens there. That yen weakness that we've been making the most of for quite some time has obviously, at least for the time being, come to an end. Another similar picture here on Swiss yen, so I'm not going to belabor the point on these. It's a very similar picture, actually. Maybe a few days difference, but otherwise pretty much the same. Has given us a chance to test our overlay a bit in trend ending circumstances, and seems to be doing pretty well. Cad Yen, again, another similar picture. So, I can just keep saying the same thing over and over again. When it comes to the yen pairs, the end of the yen weakness is pretty clear here. Next up, Aussie Yen. Like, we haven't been looking at the Aussie and Kiwi Yen for a while. That hasn't shown the same bullish tendencies as the other yen pairs, and we're still inside of that resistance level here. And on daily, it's very flat. Certainly last week there was nothing for us there, and pretty much the same picture here on Kiwi Yen, obviously with that slight difference with that bullish breakout that we spoke about last week. It came straight back inside of the channel. The trades that we did have on the table, obviously, we stopped out most of those. I think we were stopped out at break even. Unfortunately, we didn't get our take profits on those, but that's exactly what happens. Right, so that's the end of the yen crosses. Looking now at euro crosses. So euro GBP, still no real change. Last week's weekly candle, just almost a carbon copy of the previous 2 weeks. So very flat, very choppy, nothing of any real interest to us at all. Euro Swiss is a pair that I don't really trade, but like to keep an eye on it for measuring strength and weakness. But absolutely nothing on the weekly time frame. Deep inside of that channel, very, very flat. And you can see here on daily, nothing's been happening. We had an interesting lower close this morning, but it's just coming back up into the channel again. So strongly supported, well, strongly respected support level here. Euro CAD, that's on daily, flat, not interesting at all as far as most of these things are concerned. For those of you who've been discussing the hybrid approach, there is more interest here. So if you are trading hybrid strategy, then obviously this is a trade that we're currently in and could be in for quite some time. But that's another topic. And really, it's just about seeing the breakdown in cyclicity here on this execution time frame, where on the selection time frame, we've seen a continued respecting of what was support, now obviously a resistance level. We've spoken about that in our previous market reviews. So last week was no different, but interesting that we did have that breakdown in that bullish cyclicity, weak cyclicity. We've had that breakdown, and yeah, that's something that's worth keeping an eye on, even for our impulse strategies. There is potential for bearish movement here. No question about that, but it could also just keep on going sideways. Let's see what happens. And we've already reduced our open risk on this hybrid trade now through the course of last week to below half of the original risk. Takes longer for those to pan out. Euro Aussie on weekly, nothing really to be bothered with over here. So last week, obviously, we did see that bearish engulfing candle, which is quite a strong turnaround on that bullish wave from the preceding few weeks. And also, there you can see, almost gave a marginal breakout, but not quite. And then rolling over on Friday with that non-farm payroll announcement. And the last of the Euro crosses. We'll go there. Euro New Zealand dollar, flat as a pancake. And just, well, choppy, really, inside of our channels. Quite wide channels here on this. Certainly nothing tradable. Not interested in that really at all. If you're trading overlays, you've probably got into one this morning, but yeah, that's another story. Okay, so pound crosses, GBP Swiss, flat, pretty much the same as Euro GBP, very, very flat, nothing to look at. Definitely going through these quite quickly because there's so little. Daily time frame here on GBP CAD. GBP CAD similar to what we're looking at on the Euro CAD. So you can see the common factor there is the Canadian dollar, where we've got this resistance level on weekly that's continued to be respected. And again, that's interesting to observe that. This is another hybrid. We actually also got an was that an overlay? Might have been a losing overlay. But nevertheless, there's a long way for this to go. But the one thing we can say about these is we're not there wasn't that huge choppiness caused by non-farm payroll on Friday on some of these other pairs, which are more removed. But yeah, here we are, another one where we're seeing that resistance level being respected, and that was support beforehand. It's a very nice level. But yeah, we're in that. We're already short on this one. But quite a long way to go before we can actually say anything about that. These hybrid trades have got quite extreme convexity. So there's actually an expectation that they will lose, but the average reward to risk ratio is like 5 or 6 to 1. So very convex, bit more extreme. That's why they're more advanced. Okay, GBP Aussie here on weekly. We had spoken about this the previous week with a breakout. It's just rolled over. So here on weekly, nothing doing for us at all. Very strongly bearish over there, and you can see how on the daily time frame that looks like we're going to, in fact, have this high ringed if this movement carries on, and it looks pretty determined today. So if that is, then obviously, then whatever cyclicity we had has broken down. It was weak cyclicity anyway. So if you're paying attention to that, this is definitely not a market that should be interested in trading as a result of that. Right. And the last of the pound crosses. Taking a while to move through. Help to select it. There we go. Okay, so GBP NZD also very flat. We did last week ring that low, but all that's doing is showing us that we've got a very choppy market. Yeah, up down, up down. Same kind of picture. Yeah, as we've just seen on the GBP AUD. Right. So Then we move into our other crosses, starting with Cad Swiss. Still absolutely nothing here. We had an overlay running for a while, which actually got stopped out for a small loser last week. But yeah, it's just really of no interest to us here at all. We had a winning overlay on the daily, so a small loser on the weekly and a slightly bigger winner on the daily. Aussie Swiss, so bullish engulfing candle here on a weekly. Looks like we might see an end to that very weak bearish wave, which looks like that on daily, of course. And another one where we had that marginal breakout on Thursday with a strong reversal straight back inside of the channel on Friday. So yeah, nothing for us to do on this one either. Aussie Cad, see how it's respected the support level here on weekly. Been quite a long bearish wave. We've spoken about this before, obviously, with the breakout of the LPO channel here on weekly, and this was another example of a hybrid trade, which actually just managed to hit its take profit on Thursday before reversing on us quite strongly. So there you have an example of the kind of reward to risk ratios that we have on our hybrid trades, and at least that's an example of a winner. As I say, not that many of them do win. That's just the way it is. That's convexity at work. Aussie Kiwi, we did have a preceding breakout on weekly, obviously, with that we spoke about this. This is obviously what it looks like on the weekly time frame. The preceding week was that strong bearish breakout. Last week it just came straight back. So yeah, it's been fairly typical of this currency pair for a while if we go back to the early part of the year. But nevertheless, a V-shaped pattern over there. You know, we're back inside of the channel through the course of last week anyway. Nothing for us to look at. The last two, Kiwi Swiss here, flat on weekly, and just therefore choppy on daily, deep inside of our channel. You know, if you are looking to trade only an M pattern here, there is a potential for a valid bearish M pattern. But yeah, I'd say that would be pretty brave given the fact where we are in the market at the moment. But if you are that aggressive that you're only looking at WM patterns, there's an example of one of them. Kiwi CAD, just having a look at weekly again, another example of where we did look at trading this with a hybrid, but it didn't, unlike the other trade that we looked at, it hasn't actually got to its take profit. Gotten pretty close, but anyway, we're just leaving that there for the moment. Breakdown and cyclicity, of course, which we identified before with that phase one. It's respected the support level here last week very clearly. So yeah, I think we just got into an overlay this morning, and that's it. That's the 28 currency pairs. So I hope, folks, that you did manage to take my suggestion. I don't call it advice, but the suggestion last week of sitting on your hands, and you can see that that would have been the right thing to do. Looking forward to the rest of this week, I would say we're still in that space. There are, as you can see, a few pairs where there's potential, but at the moment we need to just bide our time and wait for the market to prove itself. Right, folks, so a relatively quick one today because of the lack of opportunity, and as I say, not that much happening last week. So very quiet conditions at the moment. I'm hoping that we do get a little bit more trading opportunity before the Northern Hemisphere holiday season really does kick in. It's still towards only the end of July normally where we see that starting to creep in, and it's still early June. So let's wait and see. There's plenty of time left before that, and yeah, we're hoping it's not going to be that quiet of a year. Right, folks. So unless you have any questions for me, that's a wrap for our Monday morning market review. Hope you found it useful. Yep, I don't see any questions. If you are watching the recording and have a question for me, please do pop it into the comments below this, and we will respond. But for the rest of the week, we've got some more training coming up later in the week. We've also got a few announcements that we want to make. So do keep an eye on our Facebook groups for that, please. But we have reason to celebrate, and hoping to pass on some of the joy to you guys. All right, so folks, have a careful week going forward. I've got a question. Right, Surprise is asking me on the EuroCAD, if we get bearish impulse candles for the daily impulse, will it be a trade to take? Let's have a quick look at that on daily impulse. Right, so the answer to that is no, because you should already have taken one. So if we had reason to believe that we were already into the next phase one wave, actually, you're quite right. I'm the one who's wrong here. So let me just check if this was an inside bar. High 21.17. Okay, it wasn't. So because we now have had this high ringed, which is what you're saying, and the this bullish wave is therefore technically over, and therefore we can assume we're into the next bearish wave. Can we look at taking the next trade? And the answer actually, therefore, is yes. The reason why I said no is because we've already got one from the hybrid approach, and we're already short on this market. But the fact of the matter is, because this is now obviously the start of the new week, that would be it. So it's a pity, because we had that bearish impulse wave, which was still in the well, we had a breakdown in cyclicity here already when we got into this trade short here. We'd already had phase two, and now we had another phase two, and obviously we're looking at this bearish phase one wave here. So yes, wait for the pullback, and if you get a bearish impulse candle, quite right, that's it. Good spot. Well done, Surprise. Greg's asking, is the daily impulse strategy written down anyway? If you mean, it's in the course material, so it's in the academy, in the strategy center. Absolutely, we've got detailed training on the daily impulse there. It'll take you a couple of days to get through that. And we've also got the daily impulse blueprint, which is a PDF summarized form, if you like. So Greg, if you need help accessing that, then please do drop us a line at support@gbtacademy.com, and we'll make sure you can get it. Blueprint, we can help you with that. Yeah, so no problem. We can actually just send you a copy. For those of you who are interested as well in partnering up with us, certainly those of you Academy members are eligible for that. You can also get your own personalized copy of the Daily Impulse Blueprint. So Greg, we will certainly help you get a hold of a copy of that. Any other questions, guys? No problem.